Hey everybody, I'm Christopher Green. You're tuning into AMTV Alternative Media Television. It's Monday, August 24th, 2015, and a panic on Wall Street today. In fact, I knew it was going to be bloody. I knew it was going to be a bloody Monday when I took out my cell phone last night before going to bed, and I saw the Shanghai Composite down roughly 8.5%. A brutal sell-off, breaking through technical indicators, I believe around 3,500 in the Shanghai Composite. Once it did that, basically lights out. So there's been an aggressive crash in China post a very aggressive rally. And of course, the PBOC, the People's Bank of China, has been taking measures. I expect them in the not too distant future to take even more aggressive measures in terms of a policy response to this market crash. And also to provide some perspective of what's happening on Wall Street today here in the US, with the Dow down 1,000 points right after the bell this morning. You know, what do we think is going to happen from here? What do I think is going to happen? Well, I actually expect, and as I've been talking about for over 5 years now, that we will continue to get aggressive policy reaction from the Federal Reserve, just like we've seen the same thing during the 2008-2009 financial crisis. We saw this with QE1, we saw this with QE2, we saw this with QE3, we saw this with Operation Twist, and we will soon see it in QE4. Now, people thought this was outlandish. They thought that this was laughable. They thought it was a ridiculous statement to say that the Federal Reserve would launch QE4 after 3 rounds of QE and Operation Twist. Well, I expect the Federal Reserve to take action on this in the not too distant future. Now, they might call it something different. They might call it a different name, just like Operation Twist was really QE4, but they just made up a different term for it. But QE4 in and of itself will be declared at some point in the not too distant future. Trading houses like TD Ameritrade reporting outages, others reporting outages today, the retail investor, and I'm hearing just on the streets, people that normally don't talk about financial markets are asking me a lot of questions, which I think is an indicator. The retail investor is an indicator of what exactly is happening on Wall Street. I personally think we'll get a reflexive move, perhaps tomorrow, perhaps the day after that, because there has been extreme selling, not just in commodities, not just in oil, but also in the equity market, again, with the Dow down 1,000 points today, breaking into bear market territory, and that sell-off continuing. So I do think we're going to get some kind of reflexive rebound, especially if the People's Bank of China throws in another policy tool, or perhaps cuts interest rates once again, and or the Federal Reserve, in conjunction with the PBOC, throws in QE4 or has some other kind of stimulative policy, puts something into place to backstop a bleeding market. Now, what's causing this? Well, basically the algorithm that makes up Wall Street, and there's no human beings involved in this anymore. It's just a fiction, basically. These numbers are just being traded at nanoseconds via high-frequency trading, HFT, these computers. Again, all of it's an algorithm. So when we hit certain technical levels, the Dow collapses, just like what we saw today. And honestly, really isn't much of a panic in the grand scheme of things. It would not surprise me to see the Dow Jones Industrial Average crash 3,000 points in a single day. The move that we saw in Shanghai overnight, an 8.5% move, that is a massive market move. That's a massive event. We saw the same thing recently in Greece. With the Dow down 3% or 3.5%, those are big moves, but they're not the cataclysmic moves like what we're seeing overseas. So all eyes right now should be on China. In fact, if you want to know what's going to happen in the U.S. market tomorrow, watch China. Watch the Chinese composite, the Shanghai Composite overnight, see what the action is, see if it's selling off harder to the downside or we're getting a reflexive rebound, or there's some kind of policy tool being implemented by the PBOC. If we get that, expect a violent reaction to the upside, because again, it's all a fiction. One of the problems I think with our financial system today, these computers, this algorithm, the HFT computers trading at nanoseconds, again, there's no real buyer or seller, it's just computers. And it continues to roll over the retail investor. You know, it's never good to sell into a panic. It's never good to sell into fear. It's one of the reasons why I've been heavily recommending Goldline, and you should still give them a call today if you haven't yet. And I've been heavily recommending gold and silver as a diversification method for these specific types of events. When the Dow crashes 1,000 points, when the Shanghai Composite is down 8.5% in a single trading session, when there's all this fear bubbling, that is the time when you should have already prepared yourself. You should have already diversified. You should have already taken precaution. You should have already called gold line. You should already have gold and silver as a percentage of your portfolio. You should have already made these decisions. Now, the good news is it's not too late. You can still give them a call. You can still take some of these actions. But I expect the market, as I have expected for years now, for all of this to get much, much worse. Again, none of it really surprises me. I mean, it wouldn't surprise me to see the Dow Jones Industrial Average down 3,000 points in a single day, for the U.S. stock market to have its 8.5% move to the downside. Also, a key indicator level that I'm watching is the VIX, the Volatility Index, which is hitting highs that we haven't seen, close to highs that we haven't seen since 2008 and 2009. Typically, there's an inverse correlation with the VIX to the market. So when the VIX is spiking high and options traders trade options on this for risk management purposes, that's about the time that you're going to get a reversal, which is why I think we could get a very big reversal move in the market, in the indices, in the Dow, in the Shanghai Composite, because we are quite arguably, at least in the short run, pretty severely oversold, especially with commodities. You know, part of the reason for this is the fear that global growth is weaker than the Federal Reserve expected. I thought we were in a recovery. I mean, haven't they been selling us on this freaking gangbang recovery over the past few years? Well, it turns out that growth just really isn't there. You know, China says it has like 7% GDP growth. Well, they probably really have zero. I mean, all of the indicators are pointing to the downside. Also, it appears that China might be having its 1929 moment. I mean, from a technical perspective, looking at the charts, it looks horrific. And, you know, China is not going to have parabolic growth forever, just like the United States suffered a Great Depression that, by the way, lasted over a decade for us before we broke even. 1929 stock market crash, a very severe depression, a world war were the consequence. It's exactly why it should be the expectation, although history doesn't repeat itself, but it rhymes, there should be an expectation for another war, another future cataclysm. All these events, again, we've been talking about for over 5 years now on AMTV. None of this should be a surprise. So when I wake up in the morning and I'm checking my cell phone and I see the Shanghai Composite down 8.5%, the Dow's down 1,000, honestly, I'm pretty unfazed by it because we know what's going to happen. We know that the algorithm's going to break down. We know this fiction that makes up the market's going to break down. We know that $18+ trillion in national debt's going to break down. We know that $4.5+ trillion on the Federal Reserve's balance sheet is going to break down. We know it's going to end badly. We know it's going to make 2008 and 2009 look like a church picnic. So I'm not suggesting that you panic by any means. In fact, if you've been tuning into this channel, this should really just be normal fanfare. What's happening today is just what we've been talking about. It's the expectation, just like the New York Stock Exchange shutting down a couple of weeks ago, just like the problems we've had in Greece with bank runs and bank closures. All this is coming to the United States of America, just like it did in 2008 and 2009, with Lehman Brothers, with Bear Stearns, with Merrill Lynch, with a joint merger and marriage with Bank of America. All of this is not just contained to China or Europe or Greece as an example, but is a part of this disease that makes up the financial system around the world. The United States is not immune to this, and it's why we're seeing a heavy, I think, oversold sell-off in things like commodities. Traders, investors are worrying that these growth expectations are nowhere near what the Federal Reserve has projected. And it's another reason why, I said this since the very beginning in 2008 and 2009, that the Federal Reserve would never, ever, ever, ever raise interest rates, because they can't. Now, if they really cared about a market system, supply and demand and market operations, etc., they actually would raise rates right now. They would do it right now. They would bump 25 bips, 50 bips, even if it was just symbolic, and say, look, this is a market. Markets don't always go up. Markets look like this. And that would be the actual right thing to do right now. That would be the policy move that they should do, is actually hike interest rates right now. When there's fear, when there's a little bit of chaos, that I think would bolster confidence, among institutional traders, investors on Wall Street, etc. But Wall Street has become so dependent on a Federal Reserve that bails them out anytime the market goes down. I mean, it can only go up according to the Federal Reserve. Anytime it goes down, it just creates another panic, another round of quantitative easing. Rates are on hold forever ad nauseum. And it's exactly why the Federal Reserve will not raise interest rates. Even if they do, again, it's just going to be symbolic. They're never going to meaningfully raise rates during a crisis. And now the Federal Reserve conveniently has their excuse. They can blame it on China. They can blame it on these violent moves in the Shanghai Composite. They can blame it on weakening global growth expectations. They can cite the IMF. They can cite all this bullshit as reason for never normalizing interest rates and creating the largest fiction and Ponzi scheme in the history of the world that will assuredly collapse the United States of America. Our financial system, our markets, and ultimately the people are going to bear the brunt of this. Just like in 2008, just like in 2009. It happens time and time again throughout history, throughout world history. Every great civilization, there's a beginning and there's an end. We've run this country into the ground. We are drowning in debt. We have an albatross of debt around our necks, and there is no way to get out of it outside of the reset button of war and financial catastrophe. Again, folks, now is the time to prepare. Pick up the phone, call Goldline, diversify your portfolio if you haven't already. See if gold and silver is right for you. Do it right now. Don't wait, don't panic, but take precaution and prepare now. I'm Christopher Green. Get this video out everywhere, make it viral, hard-hitting it in your face, and click the link below to support our sponsor.